The reason why you're losing in your trading, it's not because of your strategy. You're not identifying structure shifts fast enough. There's something called counter trend impulses, or CTI. And this is what shows you that the market is going to change trends before it actually does. Most traders don't even know that this is happening, and it costs them losses. Now, before we get into the 5-step process on how to actually use these counter trend impulses correctly and how to actually use it to win more trades, first, let's talk about how I found this in the first place. One thing is that I was taking a bunch of losses following overall trends. So everyone says, follow the trend and you'll win. And this is true, but if you enter in too late on a trend, it would always reverse. And that's what happened to me consistently. And it would cause me to lose trades over and over again. So I had to find out why. That's when I started to spot something like this happening. Another example right here, this chart is on the 4-hour time frame. So if you really look at this, what's happening here, the 4-hour time frame was bullish this entire time. And then you could see how this CTI moved down, completely changed the trend and completely changed the phase of the market. And then from there, we started to head downwards. So this movement right here is what we're going to use to actually profit from it. I'm going to show you exactly how we're going to do that now. Here's what most traders do. So we kind of get an idea of, what's not working so that way we can avoid it and do the opposite. Most traders are looking for a full change of structure, but obviously that's a mistake. If you're going to wait for lows to get broken, then it's going to be too late, and by then you already lose the trade. Instead, a counter trend impulse does not need to break structure to be valid. Let me show you how that looks like. So here's the difference, because this movement right here is a CTI, and this changed the trend of the market. It went from going upwards to then, after this move happened with a high level of momentum, it changed the character of the market, and then from there, we headed downwards. So you need to know how to spot this. And I'm going to show you how to do that with the 5-step process. The lows were not violated here, but it just simply made a fast move with momentum. And this move was out of character because the market was supposed to be bullish. So let's get a close up on that move right here. So this movement, notice it still made a higher high. So if you're looking at the higher highs, you would have thought that this market was going to continue bullish, but no. It actually came down. Now, while it didn't make a higher low, it made a low that was not lower than the previous ones. So by all textbook definitions, this is not a bearish market. And that pullback right there just looks like a pullback. It doesn't look like a reversal. But once you start to use this 5-step process and you know what CTI is and how to look for it, you're going to see that as completely different. You're going to see that as a change of structure and as the best hint that the market can give you about what it's going to do afterwards. Now, why does this matter? You're going to get earlier entries, right? So you're going to enter in at a better price. You're going to get better risk to rewards. You're going to avoid a lot of losses and fake outs. And you're going to be able to see the trend slowing down before it happens. So you can avoid losing the trade. You're going to be able to see where the market's going to go before it actually happens. So this is very, very important. Let's get into the 5-step process. Step 1, you want to find the current trend of the market. Are we making higher lows and higher highs, or lower lows and lower highs? So for step 1, what you can do is you're going to find your market that has a clear trend. We don't want to trade consolidating markets that are just ranging up and down and don't have a clear trend. We want to find the ones that look like this. And we're going to start to mark the highs and the lows of the market. Because if we could find a clearly established trend, then now we know where the market should continue to go. Now, what you're going to see here is you're going to see a CTI. For me, this was the first one right here. So this movement was out of character for the market to do so. And then the second one was this major one that did end up actually breaking structure, and it broke lows to the left. This is a clear and obvious one. So these are the ones that are going to be very obvious to you when you're looking for it. But this is in fact a counter trend impulse, and it follows our criteria perfectly. So step 1 is just to simply find the current trend, right? So in this market right here, AUD/NZD, we're bullish. Now for step 2 is to actually find the counter trend impulse, spot the CTI. So a strong push in the opposite direction is what you're looking for. You're looking for something that doesn't make sense that it would go down so much if we're going to continue to go bullish. Something that's out of character, something that's not supposed to happen, and it's faster than the normal pullbacks that you've seen in the current trend. I'm gonna show you a great example of this right here. This right here is on AUD NZD. So if I switch over here to CAD CHF, so here is where we had a bullish market. I'm gonna show you why this was a bullish market. So this is step one. We're identifying the bullish market, and I'm gonna show you now how to do step two consistently, how to actually find this a lot. We have a bullish market. This all makes sense. It all makes sense up until here, right? Because we're still going bullish. Even though the market has slowed down a bit, it's still considered to be a bullish market. We're still forming higher lows and we're still going higher. So on Tuesday, we formed a candle that was not necessarily supposed to happen. It's not supposed to form such a strong bearish candle that actually ends up trading below this moving average if we're gonna continue bullish. This is a CTI. And in this case, it happened in just 1 2-hour candle. You know, I'm sure if we switch it into the 1-hour time frame, you would be able to see it even bigger and even more detail. But just off the top here, you can see that movement was out of character. What happened after this? We continued to actually make more bearish momentum moves, and eventually the whole entire trend flipped to the downside. So that's how quickly a bullish trend can actually switch into a bearish trend. And the whole thing that showed you that it was going to do so was this CTI right here. This is very easy to spot because a bullish market is not supposed to make such a strong momentum to the downside. This is how you find step two consistently. Going back to AUD NZD, actually this is a market that I'm actively trading right now. I'm gonna show you how I got to my trade. This is very easy to spot right here because there's no way a bullish market, even if I go up into the 4-hour time frame, is supposed to pull back this far to then continue bullish. The probability, if you enter a buy here, that the market is going to go above this initial bullish move is extremely low. It's not going to go all the way back up, so you do not want to take a buy. I'm gonna get into that now in step 3, step 4, and step 5, but one of two things is gonna happen. It's either gonna shift into a consolidating market, or it's going to actually completely change into a bearish market. So with that being said, let's get into step 3. This is where you want to confirm the shift. We're going from either a bullish market to a consolidating or to the opposite direction, or vice versa, right? If you're in a bearish market, there's going to be a shift occurring after the CTI. And all you simply want to do before entering any trades is you want to confirm the shift. So is the trend now slower than it was before? And is the market starting to consolidate or go in the opposite direction? Step 3 is all about confirming. You need to confirm. So what do? Let's say in this scenario right here, am I going to immediately take a sell the second we come up here? No, it wouldn't make sense because we don't know if this market's going to go bearish yet. All we know is that the CTI has occurred and now the shift of trend has occurred, but we don't know if it's going to consolidate. That's something that happens very frequently after a big CTI move. So what do? You wait to confirm. You see, okay, we're either slowing down and we're bouncing up and down. So then I would just draw a rectangle here and wait for it to break out. It's either gonna break out up or down, one of those two. So that's how I confirm that now we're consolidating. Or if we have 2 lower highs and 2 lower lows, which would have looked something like this. If we would have had this, then I would have confirmed that we're bearish. But basically what you're trying to do in step 3 is write down what phase of the market are we in. Are we bullish? Are we bearish? Or are we simply consolidating? Because it has to be one of those 3. Simply what you want to do is after the CTI move is confirm where you're at right now. This is going to be crucial in order to then take a trade. You can't take a trade if you don't know where the market is at. That's what step 3 is about. Step 4 is actually identifying now the new phase. So it's obviously consolidating if the trend has died out and momentum has completely slowed down. If you see the market simply just going up and down, then that's a consolidating market. Right here on Euro NZD, this is a great example of what I mean. This is a simple consolidating market. You can see how it's just bouncing up and down since November 10th all the way to the end of November. It was consolidating that entire time. And this is a simple ranging market that we're going to avoid, right? We always want to trade ride the wave. That's my strategy, right? We're always trading with the trend. So if we identify correctly, then we're gonna avoid taking losses inside of a range. You want to identify it, right? The other possibility, after a big CTI move that changes the way that the market is moving, it could form a new trend in the opposite direction. So in this case, you want to look for lower high number 1 and lower high number 2, or vice versa, right? It could be a higher low, number 1 and number 2, in order to confirm. You never want to just trade assuming that the trend is now different with that first counter move, with that first shift of structure. No, you need to wait at least 2 lower highs or at least 2 higher lows. So this is how you're identifying the new phase of the market. Most important part of all, because if you're not identifying correctly where the market is at, you're not going to be able to take the right trade. Just as I did right here on AUD/NZD, I'm in this trade live right now, and look how it's moving. It's moving exactly where I thought it was going to. Why? Why is this? It all started from the idea, right? So I'm painting a story of what the market is going to do. I'm telling myself, we're bullish, right? So at the end of October, at the start of November, we're very bullish on AUD/NZD. Now, all of a sudden, we're starting to shift. This is where I would draw my rectangle. Okay, we're consolidating inside of here. We obviously made a very strong candle to the downside. We're trading below the moving average. This is a bearish market. We have multiple lower highs. So this is that first high up there. Even this one could be considered lower than the first one. And then you have a second lower high, a potential third lower high here, even though it's slightly lower. And then you have this lower high right here, which was my entry. So you have multiple reasons to confirm that this is a bearish market. And now I'm going to get into step 5, but I think you're starting to see how all of this can lead to you taking very successful trades. And the best part about this is that it's going to repeat itself over and over. This is what you have to understand. This is not some technique for you to start using and then catch one trade with it. No, that's not the point here. The point is you're building a skill set. If you can identify these moves consistently with the 5 steps that I'm teaching you here, you're going to be able to make money whenever. You're going to be able to identify where the market's going, and you're going to be so much better at predicting what's going to happen next. When most people are still buying, you're going to be looking for the upcoming sell, and they're going to say, you're going against the trend, but you're not. You're just going to be correct on when the market changes trend. With that being said, let's get into step 5. Step 5 is when you want to ride the wave. This is the part where just because you spot a CTI does not mean ever that you're going to trade against the trend. You cannot trade against the trend. Number 1, we wait for a new trend to be established. We need to have that new trend confirmed and verified that it's going to continue. You do that with what I mentioned, with having multiple lower highs and actual confirmation that the trend is going to continue. Like you see here, for example, you see the strong move down. That tells me this is going to continue. This is not one of those markets that's just going to then bounce back up because we got that confirmation. Number 2, we follow the new trend and we enter in with clean entries on a pullback. So you're always going to enter in on a pullback. You never want to enter at the bottom of the move. I don't care if you're correct on the trend or not. You're going to lose so many trades because it's going to immediately go into drawdown. Let's say, for example, you spot that CTI and then you immediately take the sell down here. You're going to lose that trade no matter what. And no matter, even if this market eventually goes down thousands of pips, right? And you were the first one to spot that shift in trend. You're still losing because you entered at the wrong point. Always enter in at a pullback. And just to give you a little hint about that, if you manage to enter in on the 4-hour or 2-hour moving average, this is going to increase your win rate significantly. So just remember that little tip right there. 50 moving average, 2-hour and 4-hour, it has to be trending in your favor. And the closer your entry is to it, it's not always going to be able to reach it. As you see here, I had to enter in AUD/NZD without it reaching the 50. But I got as close as possible before I knew it was going to start to go down to then enter my trade. Because once again, the closer you are to that moving average, the higher your win rate is going to be. So ride the wave. This is literally the most important part. Once you master CTIs, you're going to start to win a lot more trades and you're going to start to avoid reversals catching you. This saves you so many losses. People, like I said, they're going to be saying the market is still bullish. What are you doing? The market's it's still very bullish. Like this right here. This is such a bullish market. But something occurs where it's like That right there tells me I don't want to be in buys because it might slow down. And that's exactly what happened here in this pair. So this pair, it did not turn into a bearish market, but it consolidated for 2 weeks straight. The only way to avoid this move right here was by spotting that CTI, because by all textbook definitions, that should have been a bullish market. But you know better because you have the secret weapon. You have the CTI. You know what to look for. This is going to completely change the way that you trade. This is going to make it to where you know what's most likely to happen, even when people are thinking that the trend is going to continue. So for a short time, I'm going to be answering all questions you have on this topic in my Instagram DM. Just message me a question and I'll make sure to get back to you. The link should be in the description below. If you guys enjoyed this video, leave a comment. Let me know what else you want to see. If you need any more clarifications on this, or if you want a video on a different topic. But with that being said, I appreciate you for watching this video and I'll see you in the next one.